What is going on, crypto enthusiasts? It's your boy Whiteboard Invest back with another exciting crypto update for you today. We've got a lot to cover, so buckle up and get ready for a wild ride. Today we're going to be talking about all the latest happenings in the cryptoverse, including BTC price update, latest updates on the Ethereum spot ETF from BlackRock, Fidelity, and Vanguard surpassing Grayscale. BlackRock becomes the largest U.S. Bitcoin spot ETF. PayPal brings stablecoin PYUSD to Solana to boost retail payments. MasterCard launches MasterCard Crypto Credential, enabling crypto transfers by name. New York Stock Exchange considers crypto trading if regulations become clearer. Let's not waste another minute. Let's dive into today's hottest crypto news. Hey everyone! Today we're taking a look at the latest Bitcoin prices. As of today, Bitcoin is priced at $67,800, which is about 0.7% lower compared to yesterday's price of $68,300. This slight dip is part of the usual fluctuations we see in the crypto market. Looking ahead, analysts are divided. Some predict that Bitcoin will bounce back and continue to climb, driven by increasing institutional interest and broader adoption. Historically, we've seen similar patterns where short-term dips were followed by significant rallies. For instance, in 2017, Bitcoin experienced several drops before reaching its then all-time high in December. Others, however, warn of potential corrections due to regulatory pressures and market sentiment. In the past, regulatory news has often led to temporary declines. For example, in early 2021, news of potential regulation in various countries led to a drop in Bitcoin prices, but the market eventually recovered and even surged to new highs later that year. Despite these fluctuations, many experts remain bullish on the long-term trend. The underlying factors driving Bitcoin's value, such as its limited supply and growing acceptance as a store of value, suggest a positive outlook. The adoption of Bitcoin by major institutions and the increasing interest in blockchain technology provide a solid foundation for future growth. So make sure to stick with us till the end to stay updated on the latest insights and trends in the crypto world. Before diving into the next story, ensure you catch every moment till the very end of the video. Trust me, the juiciest updates await you. A week after the SEC gave the green light to Ethereum spot ETFs, U.S. financial institutions are making big strides to roll them out quickly. However, Vanguard remains firm in its decision to avoid Ethereum spot ETFs. On the other hand, BlackRock has updated its S1 filing for its upcoming Ethereum spot ETF, just a week after the SEC approved the 19B4 filings for 8 such ETFs. For context, an S1 filing is a crucial registration statement that companies submit to the SEC, essential for listing ETFs. This marks the second time BlackRock has filed for its Ethereum spot ETF, with the last submission in November 2023. In their revised S1, BlackRock mentioned that the ETF shares would trade under the ticker ETH. Bloomberg's ETF analyst Eric Balchunas called BlackRock's updated S1 a good sign and expressed optimism that the remaining ETF filings would soon follow suit. He predicted that these Ethereum ETFs might launch by July 4th. Another Bloomberg expert, James Seifert, echoed this positive sentiment. While the exact time frame for the SEC's approval of the S1 filings remains unclear, experts believe it might take a few weeks, especially since the Democratic Party has shown no opposition to cryptocurrency. This means there's no rush to expedite the process. Meanwhile, Fidelity's Ethereum spot ETF appeared on the Depository Trust and Clearing Corporation (DTCC) website under the ticker FETH. The DTCC lists all ETFs, both active and upcoming, but Fidelity's ETF is not yet trading, as indicated by the N for Create Redeem status. The DTCC, established in 1999, provides clearing and settlement solutions for the financial markets. Being listed on DTCC is a positive sign for Fidelity's ETF, though it doesn't guarantee SEC approval. Recently, Van Eck and Franklin Templeton's Ethereum spot ETFs also appeared on DTCC. Despite the strong support for cryptocurrencies from the government and community, Vanguard, with $7.7 trillion in assets under management, continues to say no to Ethereum spot ETFs. A Vanguard representative explained that while they continually evaluate their portfolio and market offerings, Ethereum spot ETFs won't be part of Vanguard's lineup. They believe in focusing on stocks, bonds, and cash, which they see as the foundation of a balanced, long-term portfolio. This decision mirrors their earlier stance on Bitcoin spot ETFs from January 2024. In an interesting twist, Salim Ramji, head of BlackRock's iShares ETF unit, will take over as CEO of Vanguard in July. The community hopes that with Ramji's leadership, Vanguard might become more open to crypto. Ramji has shown interest in making crypto more accessible, but he also needs to maintain consistency with Vanguard's current products and services. BlackRock's IBIT fund has just taken the crown as the largest Bitcoin ETF in the U.S., surpassing Grayscale's GBTC, thanks to a hefty inflow of over $102 million on May 28th. By the next day, May 29th, BlackRock's Bitcoin spot ETF, IBIT, held the highest net asset value of any Bitcoin ETF in the U.S., boasting 288,670 BTC worth $19.6 billion. This edged out GBTC, which had 287,450 BTC valued at $99.65 billion. The shift happened after IBIT saw a massive financial movement, with an inflow of $103 million and an outflow of $105 million on the same day. This marks a remarkable ascent for IBIT over just 4 months since the SEC approved Bitcoin spot ETFs. Initially, IBIT only had 2,621 BTC, a tiny fraction compared to GBTC's nearly 620,000 BTC, which accounts for about 3% of the total Bitcoin supply. Other BlackRock investment funds have also been boosting IBIT by including it in their portfolios. For instance, the BSIIX fund now holds more than $3.5 million worth of IBIT shares, while the Maywix fund has about $485,000 worth. After a long dry spell with no new investments and even some outflows, IBIT recently experienced a significant influx of capital, reflecting strong community confidence in the crypto market. This resurgence in interest has been driven by several positive developments, such as the SEC's approval of Ethereum spot ETFs, the passing of the FE21 bill, and supportive comments about cryptocurrencies from former President Donald Trump during his campaign. These events created a domino effect that reinvigorated the market. Last week alone, Bitcoin spot ETFs saw 6 consecutive days of inflows, bringing in a total of $1.2 billion. This pushed the total net inflows for Bitcoin spot ETFs since January to a whopping $12.87 billion. In parallel with these inflows, Bitcoin's price has been on the rise. Over the past 24 hours, Bitcoin's value increased by 1.33%, with the cryptocurrency trading around $67,900 at the time of writing. This shows a robust response from the market, underlining the growing confidence and interest in Bitcoin and cryptocurrency ETFs overall. If you enjoyed this video, don't forget to leave a like and subscribe. Your support means the world to me and keeps me motivated to bring you the hottest news updates every day. In the fast-paced world of blockchain technology, where speed and cost are everything, PayPal has made a strategic move by launching its stablecoin, PYUSD, on the Solana blockchain. This is a big deal for PayPal, as they look to expand the reach and use of PYUSD. While PYUSD first launched on Ethereum almost a year ago, it hasn't made much of a splash, with only around 8,600 holders and a market cap below $400 million. This makes it quite small compared to major players like USDC from Circle and USDT from Tether. However, the switch to Solana is expected to change the game for PYUSD. Solana is known for its lightning-fast transaction speeds and very low fees, which are crucial for retail payments. As PayPal's Senior Vice President for Blockchain, Jose Fernandez da Ponte, mentioned, Ethereum works well, but for retail payments, you need a blockchain that can handle at least 1,000 transactions per second at just a few cents each, and Solana can meet these needs perfectly. This move by PayPal is part of a broader trend in the blockchain industry where solutions like the Lightning Network on Bitcoin and Polygon on Ethereum are being developed to make transactions faster and cheaper. Similarly, Binance Smart Chain and Ripple are enhancing their platforms to attract more users and make payments easier. But it's not just about speed and cost. Solana also brings unique features to PYUSD through its token extension standard. This allows for enhanced security and compliance in transactions. For example, merchants can use PYUSD to make more private and secure transfers. By choosing Solana as the second platform for PYUSD, PayPal shows its commitment to driving cryptocurrency adoption in everyday payments. The combination of PayPal's strong reputation and Solana's advanced technology promises to create a groundbreaking payment solution that benefits both consumers and businesses. Of course, there are challenges ahead. PYUSD still needs to prove its worth and usefulness in the real world, competing with well-established stablecoins. Plus, expanding to Solana raises questions about how well it will interact with other blockchains and manage risks. Even so, PayPal's move has injected fresh energy into the stablecoin market, opening up new opportunities for using crypto in payments. It will be exciting to see how PYUSD will influence the future of digital transactions and if it can live up to its potential. MasterCard is making waves in the crypto world with its new feature, MasterCard Crypto Credential, launched on May 29, 2024. This innovation allows users to send and receive cryptocurrency using simple usernames instead of those long, complex blockchain addresses. The pilot will start with exchanges like Bit2Me, Lyrium, and Mercado Bitcoin, focusing on transactions between Latin America and Europe. Here's the scoop. Exchanges will first verify users according to MasterCard standards. Once verified, users receive an alias to send and receive money across supported exchanges. When a transaction is initiated, MasterCard Crypto Credential checks if the recipient's alias is valid and if their wallet supports the needed digital asset and blockchain. If not, the sender gets a notification, stopping the transaction to prevent any losses. This system goes global, allowing users in countries like Argentina, Brazil, Chile, France, and Spain to make domestic and cross-border transfers in various currencies and blockchains. Recently, Foxbit joined the pilot, and Lulubit users will also gain access through Lyrium. MasterCard Crypto Credential simplifies and secures transactions by verifying interactions on the blockchain, ensuring users meet verification standards and recipient wallets can handle the assets. It exchanges metadata to remove the hassle of figuring out supported assets or blockchains, speeding up transactions. To keep everything legal and transparent, it supports the exchange of travel rule information for cross-border transactions, preventing illegal activities. P2P transactions are just the start. MasterCard plans to expand into NFTs, ticket sales, and flexible payment solutions. This launch reflects MasterCard's vision shared at Consensus in 2023, showing their potential to revolutionize remittances and cross-border payments. Walter Pimenta from MasterCard emphasized their commitment to investing in technology, standards, and partnerships for safe, simple, and secure payments. Bit2Me's CEO, Leif Ferreira, expressed pride in this collaboration, highlighting their joint commitment to innovation in digital asset payments. In the coming months, a select group of crypto wallet users will get early access, with a broader rollout planned for over 7 million users on the participating exchanges. MasterCard's move is set to make crypto transactions easier and more accessible for everyone. Lynn Martin, the chairman of the NYSE, recently discussed crypto regulations, the shifting U.S. political landscape, and blockchain's potential at the Consensus 2024 conference. She emphasized that NYSE would consider crypto trading once there's legal clarity in the U.S. The $58 billion in Bitcoin spot ETFs shows strong demand for regulated crypto products. As traditional finance, TradFi, and digital assets become more intertwined, major financial players are increasingly offering crypto products. However, the lack of clear regulations is still a significant hurdle. Martin highlighted that the success of Bitcoin ETFs is a strong signal that the crypto market needs similar regulations to TradFi. On the political front, attitudes are changing. The removal of an anti-crypto FDIC chair, the passing of the FET21 bill, and Donald Trump's vocal support for crypto are noteworthy shifts. Trump has been actively engaging with the crypto community, meeting NFT buyers, and promising to protect crypto companies if re-elected. Martin is optimistic about blockchain technology improving financial processes, particularly for less liquid assets like municipal bonds. However, Tom Farley, CEO of Bullish, noted that traditional assets might not fully transition to digital due to regulatory distrust. Instead, regulators might push TradFi firms to develop their own blockchains. Competition is heating up too. The Chicago Mercantile Exchange, CME, is eyeing crypto trading products, putting pressure on NYSE. This shows the rapidly evolving landscape and the necessity for traditional exchanges to adapt. In summary, the discussion highlighted the need for regulatory clarity, the growing political support for crypto, the potential of blockchain in traditional finance, and the increasing competition in the financial markets.
Alright, that's hottest news today. If you guys did find this video helpful, leave a like and subscribe our channel for more free content. Thanks for watching. Peace out.